Hi, this is Loan Officer Ana Rodriguez. I'm here with Roberto Palencia from Farmers
Insurance.
Thank you for joining us, Roberto. Roberto's here today because as part of most mortgage payments, we have principal, interest, tax, and insurance. And when we say insurance, we're referring to homeowners insurance. So he's here to better explain to us how it's involved in a mortgage.
Sure. And so your insurance, obviously a homeowner's policy, the reason why your mortgage company has such an interest in it is because if there's a total loss for the home, they have financial interest, right? They just loaned you all of this money to pay for your dream home. And so basically if there's a fire or anything like that, they want to make sure that there's going to be a house rebuilt. And they have such interest in it that most of the time they pay for it themselves up front for the whole year. And then you as the homeowner pay them back monthly, like you said, mixed in with the principal, the interest, the taxes, and the insurance.
What is covered under a homeowner's insurance?
Yeah, so basically, again, your mortgage company cares about the home, right? And then you as the homeowner also have interest in everything that's inside your home. So your homeowner policy will include the dwelling, the cost to rebuild the actual structure of your home, and then you have your personal property as well. Like in the case of a fire, you're gonna have to buy everything brand new clothes, a new dining table, new TV. So there's money set aside for that as well. That's separate. So if your home is insured for, about $250,000, you might have, an extra $100,000 to pay for all of your stuff brand new. Then also a huge part is the liability aspect of it, to where I always recommend for homeowners at least $300,000. It's the average home, at least here in the Valley, what it's worth, because if someone that visits your home trips and falls and they really hurt themselves, especially people that have swimming pools. You never know what's going to happen with a swimming pool, and if someone needs, medical costs $100,000 a year, that liability kicks in and protects you that way, so that someone won't be able to put a lien on your home as long as you have enough liability. And it's really crazy, but especially in this state, California, someone can trespass on your property, hurt themselves, and sue you, and most likely they will win something from you. So that's where really that liability kicks in.
How is it determined, like how much liability they should have on a property? I mean, the dwelling, it's determined by the bank primarily, right? Like it has to have certain coverage. But what about all the other coverages in a policy? Do you help them, as in the consumer, choose what's best for them?
Yes, and really, especially as a farmer's agent, I try to really be involved in helping the client pick. So many lenders, especially or realtors, they're just about the home, and then they forget about the insurance policy. So they're going out and just looking for a last minute policy for their client. And I talk to so many people out there that I say, hey, do you mind if I give you a home insurance quote for your home policy? Who are you insured with right now? They don't even know, because the process of the insurance was just so fast when they were buying the home. And we all know when we're buying our home, we're signing like anything, right? We just want those keys to those homes. And so I really try to help, lenders and realtors especially. I'll go to the disclosure, the signing meeting and everything, and go over those details, because you just spent all of this money and time investing in one of the biggest decisions you'll make, your home purchase. Well, now we got to make sure that it's protected, and then also, if you don't have $200,000 worth of stuff in your home, why pay for coverage for up to $200,000? Why pay for insurance of stuff that you don't even have? So let's reduce that. You have a business, you have lots of stuff that people could go after in a lawsuit, then let's raise, your liability. So I really try to figure out what are your assets. What can people go after if something does go wrong, and how can we protect you? And sometimes, price might not necessarily go up. It's just, where do we move the coverage to protect what you really care about? Maybe you don't care so much about your separate structures. Maybe you don't have a gazebo, you don't have a shed on your property. So let's lower that down and increase your personal property, the stuff you do have in your home. Maybe you have a really expensive piano or a really valuable piece of art that we want to protect. And so it's just allocating it where it goes. And so we try to really walk through the clients to make sure that when they're done with the home purchasing process and they finally have those keys, that they know who to go to when something goes wrong, and that we're there to help to protect them.
That's a common question that we get is, once the transaction referring to the mortgage, like the purchase is finalized, are they able to go back and then sit with you, let's say once again, to review the coverages and maybe increase them or decrease them? Is that possible after you've already been paid for a policy and the purchase has been
yeah,
done?
definitely. And that's one thing that I love as far as being a farmer's agent and selling farmers home insurance policies is they make it really easy to make those changes, and they are in effect like the second I hit submit. And so we can always sit down and say, hey, you know what? I actually just bought, $50,000 worth of stuff for my home, or maybe they did upgrades, right? Maybe they put in hardwood floors, maybe they put in cabinets, and now the value of their home has increased. And what does it look like to cover all of those aspects so that if their home does burn down, they don't have to choose like, hey, do I have to get all carpet because there's not enough in my insurance policy?
Got it.
And so all of those changes we can do right off the bat, or maybe they did put in a pool, and now we want to insure the pool and we want to increase liability in case something happens to someone in that pool. So there are tons of changes that could happen throughout the life of a homeowner for the home that they purchase that we definitely want to look into, make sure that everything is always protected. And a lot of times too, sometimes you just don't get a chance or you forget maybe to reach out to your insurance agent. So normally what we try to do is do a extended replacement value, where let's just say you did do upgrades and you didn't mention it, our policies will include an extra 10% of what the home is worth to just keep that in. So again, you don't have to choose between your granite countertops and just getting the regular white, plastic tile ones. But we do, and we reach out, on a yearly basis. Home policies renew every year, and just try and sit down with the clients and say, has anything changed? Does everything look good to you?
I really do believe that it's important for people to understand what type of coverage they have and what they're getting for their purchase, because it's one of the biggest purchases that they do in their life. And though they're excited and everything, there's a lot of things that are super important during the transaction, like homeowners insurance, making sure that they end up with the right company with the right coverage. So thank you so much for your time and for informing us of what homeowners insurance is and how it's relevant to the mortgage process. Thank you so much for your time.
Yeah, of course. Thank you, Anna.
Thank you.